Hey, it's Rav. Welcome to Everyday Investor, the hottest real estate investment show in the world. That's right, I said it. I don't care who knows it. You know, a lot of people, all of us really, we take our time, we go to work in order to make money so we can provide, so that we can eat. But imagine living in a world, instead of taking time to go to work in order to get money to eat, imagine if money could make you money so that we could have a little less time at work and do things that we enjoy, spending it with family, friends, engaging in a purpose greater than yourself. Remember, whenever you're given any type of investment opportunity, you always want to ask 4 questions to start. Number 1, what is the return on investment? Number 2, when do I get that return along with the money that I put in? If somebody says to you that the return on investment is 20%, but it's over 5 years, then really it's 4% annualized. So you always have to ask, when do I get that return along with the money that I put in? 3, what is the minimum investment amount needed? And 4, you look them into their beautiful eyes and you ask them, what is the risk? The worst case scenario. If they can't tell you that there's any downside, turn and run really fast. Super excited about today's show. I'm talking to the guru of real estate investing. Been doing it for a long time. I used to watch him on stages about 10, 15 years ago. It's always impressed me. Westcott is here with us, and he's going to be teaching us a lot of things, and then even specifically how we can make money, how we can grow our money investing in turnkey properties. Don't go anywhere. Everyday Investor continues in a moment. Hey, it's Rav. Welcome back to Everyday Investor. I'm here with my friend Russell. Russell, thanks for doing this with me.
Hey, Rav, how's it going? Good to see you. I see we got the memo on the good haircut here today.
That's right. That's right. You know, I always say that, God only made a few great heads in the world. The rest he covered with hair. And so I'm glad to see you. But no, this is really exciting for me because, you do not live in the metropolis of Toronto. You were in, the Alberta area. And now I saw from your phone number 604. Are you now in BC?
Yeah, I've lived in the suburb of Vancouver for better part of, coming on 30 years now. I invest out of province, but I live in British Columbia.
Oh, I didn't realize that. Yeah, because when I would watch you on stage and you'd be teaching and educating and a lot about how you could make money without any of your own money, this partnership relationship, or as we call it in the real estate terminology, joint ventures. I knew you were investing a lot in the Edmonton, maybe Canmore, Calgary kind of area, but you had always been living in BC. So that's interesting. You're proving that.
I just shot a new video that I just released about long distance investing on how the how-tos. Like, here's the thing is you don't have to live where your investment properties are. You truly don't. As a matter of fact, if your home market is not ripe for good investment opportunities, no different than you said in the intro, you need a good solid return on your money. Your capital is just putting it out into the market and you want it to work really hard for you. We all work hard for our money. We want our money to work hard for us.
Yeah, no. I mean, if the numbers work in your own backyard, then great. But what I hear you saying is you just really got to go where the numbers are. And if you have right systems in place, then it's very easy to do. Back then, 10, 15 years ago, you were buying a property one a month, and you said you've been doing that for 5, 6 years. I mean, you had 50, 60, 70 doors or tenants, if you will. But none of that was with your own money. Talk a little bit about how you were able to do that.
Well, the simplest way is that I had no choice, because when I first got started in real estate, when I looked in my bank accounts and my bank statements, the largest number I saw was attached to a Visa statement. Okay, so I had no capital. And very early on in my career of investing in real estate, somebody shared a truism with me, is that money is required to buy real estate. But the good news is it doesn't have to be your money. So if you learn the process of other people's capital, other people's money, if you learn that process of raising capital from others, provide a service and a value to another person, get them a really good return on their investment, and you can participate with them winning, and that's how you win in the transaction as well. So that's how I chose to go forward with my investment career, was to offer really good investment opportunities to other people that did not have the time or expertise or didn't want to do the work. I did the work for them, and we did splits of profits at that time.
So you were the working partner, and you would, talk to people. And
Rav, I'm just going to share one thing. I actually prefer the term, I was the expert partner, because working is a different connotation. And as a matter of fact, my business model is set up that I'm the real estate expert. It doesn't mean I'm the one painting the walls. I'm not the one doing all the work. I have other people in my team that do all that work. I'm the real estate expert that just connects opportunities and capital to get good returns for people.
I love that. And also one thing that I believe I learned from you was that if you're not willing as the expert partner to go to friends and family first, then perhaps you're not ready, or you're not the expert, because you believed in what you were doing so much so that why wouldn't you want to help those that you love and care for make a great return on their investment?
Yeah, and it all depends on your family and friends. Like, not every family is ready to work with you or wants to work. Some people just aren't in the mind space or mindset to be able to think about this. Some people might be in a victim mentality, things like that. But I firmly believe you must help your family and friends first. And if you have a skill, and if you have a passion, and you have a vision, and you have a opportunity that you can help family and friends, why not? Why wouldn't you go to your family and friends first?
Yeah, no, it makes sense. But really what I like about it is, you go to your family and friends because you care about them. And it means that you wouldn't want to jeopardize, their few dollars or many dollars. You wouldn't want to jeopardize their relationship. So when Rav is confident enough and feels like, I know what I'm doing inside out, I am the expert, well, of course I want to go to those that I care about, because as we're going to look at today, I mean, you can make returns of 20, 30%. And generally speaking, Russell, you would split those kind of 50-50. So, you're making your friends and family 12, 15%, annualized returns just in buying a property. And back then you were buying kind of single family homes. I don't know if you still are, but there were single family homes, and there wasn't, it wasn't these big apartment buildings or duplexes or, so no, I really appreciate that. I took it to heart, and it made a lot of sense that, I know I'm ready when I'm almost pleading with people that I care about that, hey, take your money that God's given you and let's grow it so that we can do many things, whether it's benevolent things, whether it's to enjoy a vacation, all that kind of stuff. So you now are doing a lot of teaching, a lot of coaching. You have a podcast, WrestleWestcott.com or .ca? .com. I mean, people can go there. They can follow your podcast, and there's tons and tons of teaching there. You're doing some coaching, some mentoring. What was the transition? Because I know you love to enjoy your family as well. What was the transition from you, and still are, an active real estate investor, to becoming this kind of guru in teaching people how to do the same thing?
I'm sorry if I'm chuckling, I often chuckle when I hear the word guru, that we should have a sitar playing in the background or something.
Hey, I'm Indian.
Yeah, that's right. You know what? The bottom line is, at my core, I love and I help. My core values in my life is to inspire, encourage, and come from a place of love. And I've been blessed with so many mentors and coaches and guides in my lifetime of investing this. I have been now called to take their teachings and move it forward and help out a new generation of real estate investors. Because I believe there is a new generation of real estate investors that is starving for some wisdom. It's one thing to see somebody who's been investing for 5 years, but all they've caught is a marketplace that's just gone straight up and doubled in value. And sure, everybody looks like a hero when markets are values are doubling every 5 years. But why not share some wisdom of someone who's been through some ups and some downs, some down markets, some flat markets, lost some money in deals, and, it's had, some proverbial had to overcome a lot of adversity. So I just was sitting back a couple years ago, and I was just saying, you know what, I have way too much information and knowledge and skills. It is selfish of me to just keep that locked up in a vault in my office. I need to start sharing that with the world, which then created YouTube videos and training academies and coaching and podcasts. And there's an entire thing that I'm actually building out a media company around my brand to have the tools to inspire 1 million. That's my goal within the next 35 years, to inspire 1 million real estate investors with the tools and resource to help you buy one more property, right? And one more property is an exercise I usually walk people through to determine what one property equals to you, right? For example, right? If you bought a property, let's say $500,000, and in 15 years it was free and clear, the tenants paid it off for you, you would have a $500,000 pension fund that would pay you potentially close to, if you had it as a suite house, it could pay you close to like $70,000 or $80,000 a year. So one more property would be worth $500,000 and $70,000 once it becomes free and clear. So that's my mission, is to inspire 1 million people with the tools and resources to help you buy one more place.
I love that. And are you staying in that niche in terms of property, or have you done, maybe you've done, but are you teaching land development or flipping or investing in mortgages or investing in real estate investment trusts or buying apartment buildings and adding value? Like, where's your niche? Is it A to Z? Because I know you know how to do it. Or do you like to stay in just the properties and mostly turnkeys?
Well, the simplest way I can describe it would be as follows. I categorize real estate investments into 2 buckets, and I call it MMBW. MMBW. Make money, build wealth. Okay, so that's the 2 buckets I have. So you have make money strategies, buying wholesale properties, flipping properties, the BRRRR strategy, pulling, acquisition fees out, all kind of, things like that. Making money strategies are different from building wealth strategies. Building wealth strategy might be you put the property into a new construction place, you sit and you hold it and you wait for it for 10, 15 years. Once it becomes free and clear, you now have a nest egg of $500,000 and $70,000 income stream. So make money, build wealth. MM.
And I know, in love, there's a lot of things that frustrate people like you and I. When people get into this game for time freedom, and yet they've created another job and they see their spouse and children less. Talk a little bit about that. You know what we'll do? It's such an important topic. Let's take a quick break, and then I want to come back, Russell, and let's talk about the reasons, the why of how we get into this game and how we make sure that we're not getting distracted, burdened, stressed, and one day regret, man, I have all of this and I missed out on the very reason I wanted all of this. We're talking to my friend Russell. We're talking about just philosophy of real estate. We're going to look at some numbers. Don't go anywhere. Everyday Investor continues in a moment. Hey, it's Rav. Welcome back to Everyday Investor. We're talking to my friend Russell, a wealth of knowledge when it comes to creating wealth and making money. I learned that we separate those 2 things. Russell, thank you for being on the show. Before we went to break, I was talking to, because I talked to you before, and we were talking about just kind of what breaks your heart sometimes, and hence why you even wanted to start the education company, and brand it just your name, Russell Westcott. Where can we make a mistake? And I know you're very open and transparent. Even yourself many years ago, it was easy to go down and ask yourself, why am I doing all this? Talk to me a little bit, nurture us.
Holy moly, it's almost like I could probably write a book on it, on just the mistakes alone. But, probably one of the biggest mistakes that I would share with a lot of people, there's a lot of people just getting into real estate fairly start within, I would call anyone less than 5 years or less experience would be new. A lot of people are getting into real estate and they're buying lots of properties based upon an ego, based upon how they can flex on Facebook, and based upon, maybe an insecurity, or based upon some kind of a inadequacy or something that they're lacking in their life, to have just an ego play to just prove it. Look at me, how great I am. I'm the greatest thing. And the reason I know that is because that's what I did. And I did that for many, many years. Was I was buying properties on ego, and I was buying properties that had to prove something. I was not buying properties intentionally. I was not buying the right assets in the right areas. I was buying properties just based because they were cheap in certain areas, and how many more pins or how many more awards or how much can I brag about how wonderful I am? Because I'm on the guy on stage, right? And I'm bragging about all the properties I'm buying. So so the best thing I could share with people is be very intentional on your purpose, on your properties, and be very purposeful on your purchases, and not just do it from an ego standpoint.
And do you find that people, all of a sudden find themselves way busier than they need to because they don't have, the systems in place?
Yeah, and maybe it's because of age and wisdom, and maybe those few gray beard hairs I can only show my beard, right? But the gray hair of theirs, it's not a badge of honor to be posting that you're up all night painting your properties and screening tenants and doing this work and showing how you cut out holes in walls. It shouldn't be a badge of honor to do that. It should be, you should factor in your time. And there's two calculations that I add to my return on investment, return on equities, that a lot of people don't put in there. And that's a return on time, ROT. And the other is, I'm going to choose my words correctly here, but it could be, it's called the pain in the backside index. And it could be a PEI, and another word for backside, right? If properties do not are pains in the backsides, or properties that just don't get a good return on my time, which is my most valuable, precious commodity I have, I will say no matter how good the cash flow potentially could be, they have to be good, solid properties that I would be proud to live in, that I would be proud to say that I owned a piece of real estate, not of, I'm embarrassed by that property over there, right?
Yeah.
And it really came from some core inner work that I did with a personal coach. And we came up with my core values. And I shared that: inspire, encourage, and love. And I look at everything of all my real estate through those lenses. Do I feel inspired by that property? Is it encouraging? And do I love it? And if it doesn't meet those criteria of my core intentions, it's a hard no.
Love it. Okay, take us through one property that you've done recently, and teach us how we can make money if we were to imitate the same strategy.
Okay, so the one I'm going to share with you is what I would call on the build wealth side of things.
Okay.
So Edmonton, Alberta.
Build
wealth.
Yeah.
So it's a long-term buy and hold is the strategy. Okay.
Okay.
So purchase price $460,000. Okay. Now, when I say purchase price, that is a all-in price. That includes taxes, that includes landscaping, that includes fencing, that includes hand keys to tenant complete. Okay. A lot of people on new construction, they'll quote a price, and then after the closing, oh, well, you need to put blinds in it now. Oh, and next summer we need to put the landscaping in. Oh, and what about the fence? Did you factor in all those things? Okay. So the reason why I build that into the price up front is because I get mortgage on all those things. I actually get mortgage on the blinds that I put on the fencing and the landscaping. So it's turnkey. Now, Rav, between you and me and the fence post in Alberta where I'm buying, there's no such thing as land transfer tax. So just as an FYI, you don't have to pay land transfer tax.
Which in Metropolis here in Toronto, that's a lot of money.
Well, on $460,000, that you potentially could be $25,000 or more in just land transfer taxes alone.
Okay, so that's one reason why you like Alberta. So turnkey, define that for Rav. I barely have my grade 12. Yeah. Turnkey means what?
Now, I always have to make the clarification between turnkey and turkey, because they look the same when you actually look at it on. Turnkey is something that's completed, done, and it's something that is purpose built for tenants. Okay, so the process is as follows. I go find capital. I get money partners that qualify for financing and also come up with the down payment. I then engage my number one property source in Edmonton. He then goes and solicits all the land positions available that he has access to within his group of builders. He will then hand pick the cherry on the top for my portfolio. And, and I can go into all the detail of our criteria, but let's put it this way. My realtor hand picks a property, and then we put the builder in place to build it. So the builder, we will then enter into a purchase and sale agreement, essentially respect building. And the builder will put up their money, their credit, and they will build it on their dime with only a 5% down payment from my end. Okay. But I'm purpose building the rental property, meaning it's designed for tenants is the best way to put it.
So first of all, you find the capital. So you have a partner involved in this.
Always.
Okay.
I want to share it. I want to share the wealth.
Yeah. So you're still in the JV format. So you and I know you're not finding. This word find, they're lined up for you now, right? They're lined up.
They come to me. They're attracted.
How about I take that out and I put choose. You choose.
Look at this. Love it.
You choose who's the money partner because you're the expert partner. Number 2, I said find builder, but actually that is 3. Number 2, you're working with your realtor, and is your realtor finding the vacant land? Is that what they're doing?
Well, essentially, my realtor has all the relationships out there with both developers and builders. And what he's doing is he will get lot plans before all this kind of stuff by his relationship with the developers. And he will actually go in and pick which lots make the most sense for investment properties.
Got it.
And it's a formula. We look at parking, we look at lot usage, we look at frontage, we look at garage suites, we look at all kinds of different things, but he hand selects investment grade land.
This is great. I love this because normally it's a pre-construction where it's already done, or it's a resale, but you are building this. You've got your money partner. You're the expert. You work with the realtor. That realtor sources the builder. And so now Russell, something is now brought to you by your realtor. You like it. Your money guy likes it. Or really the money guy just trusts in you because you're the expert. And so then now what happens? So the purchase price was $460. What's the investment amount?
Investment amount would be roughly about $92,000.
And what's that? Where does that number come?
That number comes from 20% down payment and some closing costs.
Plus closing. And you said what? 92,000?
Yeah.
So 92K. So this is given, today. And then when is the tenant actually in the property? How long does that process take?
Well, interesting to note if we do it right and we time it correctly. So just as an FYI, we're only putting 5% down at the start. We have full conditions. We have all that. The tenant truly moves in when you get possession. Because if you actually structure it properly, we actually start marketing it before it's complete. We have a relationship with our builders that we can do their show homes, that we will take tenants, my property manager will take tenants to the show home and get people qualified. One of my coaching clients truly closed on a property and had both suites, the up and the down, rented within 4 days after closing.
And this is all done, Russell, within a year?
All within potentially 8 or 9 months.
Okay, so now teach us how we make money.
Okay, how you make the money on this property? I'll keep it to simple numbers because I'm a simple guy from Saskatchewan. I do have my grade 12. I passed grade 6. I had to take grade 6 twice. So, sorry. So at $460, we're buying it. We're renting that property out for just under $3,300. It's a legally suited property, upstairs and downstairs, including utilities. Okay. Once you factor in all the expenses, including a professional management company, including all the allowances, all the vacancy allowances, all the maintenance allowances, all that kind of stuff, and including a mortgage, which I'm using for this example, only at 2.5%.
Yep.
My last 6 mortgages I renewed at 1.92, just as an FYI. Wow. Okay. The cash flow on that on a pro forma basis is about $750 a month.
And that annualized is 750 times 12.
What is that? $9,000.
Okay. So on cash flow, I made $9,000, and then somebody's paying down my mortgage.
Yeah, 8,400.
Pay down is 8,400.
Yep. And appreciation, natural appreciation that I've built in is at 2%, which is on a conservative side, is 9,200.
Wait, that's very exciting what you just said there, because I've never heard, very seldom do I hear somebody be very conservative and say 2%. A lot of times they're saying 7%, 6%, 5%, but you're saying you only gave yourself a 2% increase, because we know that real estate goes up and down upwards. So 2% on the 460 is what?
9,200.
9,200. And is there anything else that I'm missing? Are you renting out the garage or the roof or?
No, well, here's an interesting thing of noting here is this property that I did buy. Some of the new properties that are being listed on the marketplace are actually coming in at $20,000 and $30,000 higher. But I'm not going to count any of that in at all. Like there is an opportunity that you potentially can negotiate, especially I buy in multiples. Like last package I negotiated, it was on six suited houses all in a row. And I got a 6-pack pricing. And then I just put different capital partners on that. That's what I'm doing. So in this one, I bought 2 together. So essentially 4 units, I got a better price. I believe a better price. Okay. Nice. So to factor that in, of those numbers, what is it? It's 26,600.
Is that what it is?
Yep.
26,600 divided by the
I'm going to correct that 92 number. I forgot to add the closing cost. So it's 94,500 for closing plus down payment.
It's okay. So 94,500. So what is 26,600 divided by 94,500?
28%.
So 28%. And the reason why I love that number and that we actually made more, because the property is worth a lot more than this. You only put 2% natural appreciation, but it's worth a lot more, but we're not including that because that's really only the first year. But every year we can enjoy 28% and more, because as we pay down the mortgage, the cash flow gets bigger. And so what you're saying is, if Rav is the money partner in this deal with the expert, Russell, I get to enjoy 14% annualized returns writing a check. Is that what you're saying?
Yeah, essentially, and the way I position it at, coming back to time, is it potentially will be about 2 weeks of your effort for that kind of return, and the rest of could be 7 to 10 years of my efforts to do that after that, right? So I put it back to, are you okay of doing a little bit, like you have to do a little bit of work, right? You will have to qualify for financing. You'll have to analyze some documents, things like that. So it's about 2 to 3 weeks of some time and effort, but after that, everything else is taken care of for you.
Russell, I love it. I love what you're doing. I love your heart. Time has gone by here. Of course, your information is here on the screen, but one of the best places to just learn from you is your podcast. So I want to encourage people to go there. But Russell, thank you so much for doing this, and we'll have to have you back real soon.
I'm honored. Thank you, Rav.
And thank you for those that are watching, whether it's TV, online, via podcast, listening. Without you, we wouldn't have a show. Grateful for you. We'll see you next week, same place, same time. Honey, I love you. I'll be home soon. Thanks for watching, everyone.